I mean, this does qualify as an emergency, obviously.
It's an emergency.
It's a content emergency. Like, we obviously can't just let this go unaddressed. I think, is this the biggest short squeeze of all time? Like, in terms of market attention toward it? It's bigger than Herbalife.
Oh, multiples.
Like
That was Icon versus Ackman. This is way bigger.
There's going to be books about this, isn't there?
The storylines, there's so many stories of this for this.
Ben's already written the first 4 chapters.
I'm Mike Lewis's ghostwriter for this.
Who's gonna do the book? Citron? Like, is Andy gonna write the book? I don't know if he's a writer. Someone's gonna have to.
Guys, Schwab is Schwab down.
Vanguard was down. Robinhood was down this morning.
How is Vanguard getting hit?
A lot of people.
I'm turning my target date
GameStop
funds
on
into
Vanguard.
AMC. I don't know.
I can't imagine BlackBerry and AMC and GameStop being heavily traded at Vanguard. So maybe they're just down in sympathy, like when you fly a flag at half-mast. I don't know.
So here's my
I don't
question.
really understand what's going on.
Here's the most interesting thing about this story to me right now. So we saw Melvin capitulated yesterday. The question is, how big does this get? There's never one cockroach, right?
I think so. I was telling Michael this morning, Josh.
Wait, hold on.
Okay,
Can I finish
all
my
the
thought, please?
Yes.
Sir.
Jesus, Ben.
Yeah, how dare you interrupt me?
Ready to go.
So the people whose shorts are being targeted,
Yeah.
they have to delever, and now I don't want to call them trolls. The herd is now hopping on their shorts, on their longs. I'm sorry, they're shorting their.
I don't
longs.
believe that story.
I do. So how does this play out? How far do the dominoes fall, and does this spill over to other areas of the market?
Let me see if I understand what's being reported. Hedge funds that have large short positions in GameStop and maybe AMC too have long holdings in things that are very popular hedge fund stocks, like, for example, Caesars and Peloton and JD.com, right? Those are like the hedge fund VIP list.
And now those are going to be attacked on the short side.
Because the short funds have to liquidate assets in long holdings so that they can cover losses in the shorts. So they're going to meet a margin call by selling their favorite names. I don't believe in this story.
Really?
I think that's taking it a little too far.
No, it's
I
not.
agree with Josh.
I don't think there are 500 large hedge funds that are short GameStop.
I do.
Sorry,
Connect the dots. This is not
Connect the dots.
This is not.
What do you mean?
This is not tinfoil hat shit. This is happening.
This is
John
QAnon.
Krinsky put out charts this morning. Did you see that?
No.
He was saying that the hedge fund VIP list, which Goldman Sachs publishes, versus the 20 most shorted, the index. Goldman keeps an index of the 20 most shorted stocks or whatever it is, and he was showing one chart getting smashed while the other one was going straight up. The most heavily shorted stocks, I think, this month are up 60% as a group, and the S&P's up maybe 6%.
So how are you not making the connection?
Here's where I think things could get weird. If you're an institutional investor, you're an endowment or foundation or a pension, and you are invested in Melvin or one of these other long short funds that these places are going after, the biggest thing you hate is looking like an idiot to your board or to your investment committee. So I think there could be a run on these hedge funds from their investors. I mean, putting aside Citadel and Cohen and those people putting money in, if you're an investor in this, do you want this on your quarterly report as of March 31st that you are an investor in this fund? No way. There's going to be running the hedge fund, right?
I'm gonna get this chart up for you guys.
Well, wait, hold on, Josh. I'm sharing my screen. Let me grab it.
All right. Yeah, grab this from Slack.
So I don't know if this is the Krinsky chart you're talking about, but Bianco shared this. Is this what you were talking about?
Let me see.
Can you guys see my screen?
No.
You can't? Hold on, let me try one more time. Share screen. Share screen.
Bro,
Your entire screen.
Bro,
but don't you think it's harder to push around a huge stock that you're long instead of one of these little names that everyone is short? I think it's way harder to push around. They're not going to be able to push around these huge stocks that people are already long.
So Ben, they're not talking about the huge stocks though. So to Michael's point, Duncan will post this. Don't worry. To Michael's point, these are the most popular hedge fund candidates that would be affected by this: TDG, Peloton, PayPal, Micron, Mercado Libre, Melly, JD.com, IAC. Like these are like the hedge fund VIP list.
Okay,
right?
that's fine. I'm
So
willing
that's
to
the
see
argument.
Peloton go into a bear market so I can buy it.
That's the argument that's being made. I'm
right.
not saying it's right, but it's I understand being afraid of it. I just don't think it's going to happen.
So what do we think are markets broken? Is this a bigger issue?
No, because these are very small companies. If this was happening with Microsoft, I would be very nervous, but I don't think that any message board has the firepower to do this with a stock that's like systemically important.
It's not
These
just
stocks
the
are not
message
in
boards.
any index.
Josh, it's not just the message boards.
But don't you,
I
Michael? Don't you
understand
think that the hedge funds are gonna reload here, and they're not gonna get taken down by these things now that
What
they've
if
seen
they
can
join
happen?
them? What if they join them?
But don't you think they're eventually gonna fight back too?
No.
Well,
I mean,
with
the
all the
money
money
is
they
not
have?
made in joining them. The money is made in saying, all right, let's look at GameStop. They report earnings in March. Those earnings are garbage because they are always garbage.
March is
'Cause in
that's 19 years away.
I understand. So if you're Ken Griffin, here's what you're doing. You're raising a pool of capital internally, specifically dedicated to smashing that stock as you get closer to earnings. And by the way, insiders can't even sell right now. So there's a guy, the CEO of GameStop is this guy, George Sherman. This is the greatest insider trade of all time. He bought 25,000 shares in April of GameStop. He bought it at $4 a share. He can't sell it.
By the
So
way,
his net worth on paper is like $500 million. You think he's not selling enormous quantities of stock?
So it's not just Citadel though. Forget about Citadel, who's making markets and they're crushing it. There's hundreds of hedge funds that are whatever, 30, 50, 60 million dollars in assets, $100 million. You don't think they're involved in this?
I don't think they have a mandate to make this a significant part of their portfolio.
It
Not
doesn't,
like you
dude. When stocks are going up 200% a day, if you're in the options, it doesn't need to be a significant part of your portfolio.
I agree. Their big money came in on this. There's no way it gets pushed this far by little retail traders. Big money
Totally
came
agree.
in from someone on this.
Totally agree. And by the way, when the investigations begin, they probably have already begun and haven't been announced. They're going to be looking for big players who were exacerbating this activity. Not that it's definitely anything wrong with doing that, but that's what they're going to look for. I don't think they're going to start perp walking 24-year-old kids who are doing this from their parents' home. But I do think they're going to want to see who's active in the options market in size.
This is too
making
big.
These things even wilder.
There's, in my opinion, not knowing anything, my uninformed opinion, there's nothing they can do. The monkey is out of the box or the bag, or wherever the monkey leaves. It's gone. They can't crack this down. What are they going to do? Shut down Reddit? Shut down Robinhood? It's too late. There's no going back.
There's no going back.
But
this is
eventually
now a permanent
Yes.
way the market functions.
So you read what Nadig wrote yesterday. He basically
Yeah.
said, this is the algorithms, right? TikTok's algorithm is so powerful that they're going to discover what's ever next. This is the herd, and it's moving too quickly, and it cannot be shut down. You can't. We're too far gone. So,
Mike,
what?
You know what could happen though? You can have the herd can splinter. You can have 12 different herds that are less powerful. It's hard to
why would they
believe that
splinter?
all of this.
Why would they splinter?
Because they don't. Because
Why did the
everyone
Beatles
wants
break
to
up? It's
lead
just-
the next. Because everyone
Who's the
wants
Yoko
to
Ono
lead the
here?
next one. Why do all revolutions splinter?
But
Why?
I agree. There's going to be one time where they're left holding the bag and they try something and it doesn't work, and they're all going to lose their shirt and they're going to question what they're doing. There's no way they can. There's no way they can keep doing
It's already
this.
splintering. There's 5 stocks in play now. It's BlackBerry. It's AMC.
Dude, Tootsie Roll's up like 50% today. It's all the same people and all the same names.
Wait, Tootsie Roll is a public company? I did not know that.
Apparently.
It was made for this. It was made for this.
Guys, do we agree this is not going away?
But Josh, do you agree that this is not the same thing as 99 though? Using these junk companies
No.
like these are not IPOs. This is just
Nothing
weird,
to do with
right?
99.
There's
There's no
is just
underwriting.
So bizarre.
There's no underwriting. And actually, it'll be interesting to see if GameStop does a spot secondary. They should, if they have any brains. The reason why
What are they waiting for, by the way?
let me jump in on that. The reason why Hertz wasn't able to raise money after that massive run up. By the way, that was a dress rehearsal for this. Hertz was stopped from raising money because they had already declared Chapter 11. If in an alternate universe where Hertz did not file for bankruptcy the week they did, and then that action happened in the stock with all those shorts getting destroyed in it, they theoretically could have raised like $500 million, $700 million and been in business to this day. Like that stock would have survived.
Well, the
Hertz
story
still
is
around.
this is what AMC did. AMC was going to go out of business, and they were able to raise money, and now they're going to stay in business.
Wait, when? I didn't see that story. Where is that?
It was on Bloomberg this week. This happened this week. They were able to sell equity, and now that basically saved the company because of this.
They should sell even more equity now. Like this is it. If you're not selling now, what
Are you sure?
Who's your treasurer?
Ben, could you pull that story up? I'm not seeing it.
Hang on.
This is in December.
Okay,
it says
maybe it wasn't this week, but that they were able to say it because people piled into the stock, basically.
I see this back in December. AMC fighting bankruptcy to offer 50 million shares.
Okay, whatever. I'll find this. Someone posted it this week. I'll find it. I'll share it for you later.
Anyway, to me, again, the big question is this contained or does this bleed over to the broader market?
I don't know. This is happening in a very exclusive subset of stocks that are consumer oriented, where people who are getting their idea generation from TikTok or from a message board, they've heard of the company.
Bed Bath and Beyond.
I own one of these stocks. I own Shake Shack, and it looks like the herd has discovered this name. It's up 18% today on no news.
Jeez.
I have no idea what's going on.
When is the herd going to
And-
discover SPY? Help us out.
Has someone figured out how to blame this on index funds yet? Because I'm sure that's coming.
Dude,
anti-index.
that's happening all over the place. People are saying, well, there's no more active managers to set prices. Really? There's no more active managers? How many trillions of dollars are in active management?
Yeah, the only people doing this stuff are active managers.
Think about the volume that we've seen lately, and that people are worried about, like price setting, and that's why you can't say that active managers are like better at price setting than anyone else, because they can do stuff like this.
So Balchunas tweeted yesterday, GameStop was the most heavily traded security in the market yesterday.
Even more
Have
than
you ever been-
SPY, Apple.
Dude, GameStop.
Hold on.
It's GameStop, Tesla, Apple, Microsoft, Amazon, Beyond Meat.
Have you ever walked into a GameStop IRL, Mike? I know you're not a video game guy.
I
Have you ever?
I was a gamer growing up. No, I haven't. There's one. Is there one on Sunrise Highway?
I used to go in to like sell the kids old games, or like see if there was a problem with the console. Have like the kid behind the kid like take a break from smoking weed and look at the console for me, and he'd just be like, "Did you try unplugging it and plugging it back in?" So if you looked at these stores and then somebody said this was the most traded stock in the market yesterday, it's hilarious.
Duncan,
throw
throw
you
this
can't be
up.
mad at this.
So it's gone. So 2 weeks ago, GameStop was $1 billion company market cap. Today, it's $21 billion. 2 weeks ago.
Do you know that would put it in the S&P? The last round of companies that got added to the S&P 500, like Etsy and shit, they were like 16 billion. So, 15, 16 billion. They added 3 names this summer or something.
I think the craziest thing about this story to me is the Wall Street Bets people laid this out. People have been piecing together this story.
Ben, you nailed it. You said markets moving faster. You said that they're getting smarter. You've been on this for months and months. So kudos to you.
I just think it's like the technology thing, and they caught the old people flat-footed, and they're using technology. I mean, this is a bad analogy, but the Arab Spring thing was like the first social media. This is like the market's Arab Spring, isn't it? Like these people got together and they made something happen.
I
out of
wanted to ask
nothing.
you guys about
This
that.
is watershed. This is watershed moment. This is it. I really believe that.
I wanted to ask you guys what you make of the argument that the only reason the media is flipping out over this is that the wrong people made money this time.
I don't buy that.
And the wrong people lost money this time. And really what's going on is like a reverse trickle down where, people that historically just never have an opportunity had this opportunity to take billions of dollars away from people that have always had it easy. And I'm not saying I agree with that, but
this is a huge story. Let's make an important distinction here. Nobody is crying for the hedge fund managers specifically.
Right.
But it's not just rich people's money, right? Like there could be pensions of teachers and cops and firefighters. This is not only rich people's money.
It depends on the hedge fund. I think in this case, it's probably all rich people's money.
I do
Like,
think it's funny,
I don't
though,
think
that
the guy shorting GameStop is doing that to fund nurses' retirement.
I hope not.
well,
I
and
don't
by
think
the way,
that's the case.
people shorting stocks the last dozen years have not exactly gotten wealthy either, except from their expense ratios, I suppose.
So people were tweeting that this is a Billions episode. I emailed Koppelman yesterday. I'm like, I know you guys are seeing this shit. Like, this is real life. Like, this is like Billions in real. And they're like, dude, 500 people have sent us this already. We can't. There's nothing for us to do with this. It's like it's already its own thing that everyone knows about.
Truth is stranger than fiction. They couldn't have written this. It would right?
I don't
Right.
think so.
All they could do is reenact it. You can't make it crazier.
But
There's
don't you
no
think
way
if it
to
was-
make this crazier.
Don't you think if there's like a big retail, like let's say a bunch of people own GE in their retirement account, and a hedge fund went after it and took it down, and they ruined a bunch of people's retirement, you don't think that would be a big story these days about rich people taking down the regular average Joe?
Right, but right. So what's happening here, though, is that you've got hedge funds that are basically being forced to liquidate, and all of the gains are going to people who don't have a lot of money and aren't powerful in society, and that's what's so exciting to people on the internet, and that's what's so jarring to news anchors and people who are accustomed to reporting on a different kind of person making all this money. So I think that's a really interesting aspect of it.
Well, the
I also-
good. Go ahead,
I don't
Ben.
know how these hedge funds in their like risk management protocols, they all have all these PhDs on staff that are supposed to be there for risk management. How do you short a stock that has more shares sold short than the entire float? How is that in your risk management protocol?
That's the other thing that the Wall Street Bets people are like, dude, you want to be 140% short a stock? They
were asking for this.
You were asking for it. I agree with that. I am sympathetic to that argument. Like, what kind of a tough guy is sitting still short a stock that's gotten crushed already and is over 100% borrowed? Like, what do you think is gonna happen? You might not have expected this. This is meteoric, but I mean that's all risk at that point, right?
Exactly.
Just mechanically.
How do you not have guardrails in place?
Who do you want to have the guardrails? The exchange? You want them to halt it?
No. I'm saying the hedge funds on their short positions.
Yeah, they screwed up big time here. And the funny thing is they'll blame a message board as opposed to saying we screwed up. We shouldn't have been short a stock like this.
I think there's complacency too. Maybe when you've like made all this money in a stock and it's obviously a damaged, shitty company, you're not expecting something like this to happen. It's like the last thing that you think is even possible. You can't, because it's not in the textbooks. You don't learn about this. You can't envision a scenario where 2 million people on an internet site are going to get the idea to coordinate and run something up for uneconomic reasons.
That wasn't in the back test?
No, right. All you can imagine is like, why would anyone buy this stock? It's garbage.
So
Like, you can't imagine people not caring about the company at all.
So they might, who knows how long this GameStop story lasts. This could end today or in 3 weeks, but
Where is it now? Can we throw up a live chart?
GameStop is
It's only up 106% today. 305.
GameStop's at 325.
So to Michael's point about like this stuff not going away, I do think there's something to this. That don't you think a story like this is going to invigorate people? Like I've been kind of poo-pooing we're going to democratize everything in investing, but think about crypto was all regular retail people. I mean, it was the tech people too, but institutions are just now coming in years later. And something
Yeah.
like that, it feels like the retail crowd has been the big winner of the last 10 years by far in the investment world.
In other words, crypto worked without having permission from any of the traditional gatekeepers. The New York Stock Exchange, the large brokerage firms, FINRA, the SEC, the people who are in charge of banks, the people who are in charge of U.S. currency, the Treasury, the IRS. Absolutely no one gave anyone permission, and it turned into this $300-500 billion thing, like with nobody saying yes. And this, I agree with you. This is an echo of that. This reminds me of that. And then what's interesting is all of a sudden the big dogs take notice, and that amplifies the trend that was already in place. So seeing Elon Musk and Chamath start sending out tweets about GameStop yesterday, I just said to myself, "Oh man, if these people haven't covered yet, I don't know what they're gonna do."
So Jason Stein this morning wrote, so Andrew Sorkin said a few minutes ago on CNBC that you can't treat Robinhood traders as adults because some are buying AMCX when they mean to buy AMC. This point of view that retail investors can't make mistakes, learn, make money, just like pro investors do, is exactly what inspires the movement. And I could not agree more. These people have never been more galvanized by traditional Wall Street people saying that they're dumb, that they don't get it, that it's going to end badly, that they're going to blow up. Think about how many lattes these people can now buy and not have to worry about going broke.
Then they don't take themselves seriously. That's the best part, I think.
I agree with that.
Like they're not trying to be so professional.
One of the things that I was saying over the summer, I was doing this show on CNBC called Summer School, and like people were like mocking it, like, oh, talking to TikTokers and Robinhood traders about their finances. It's like, what do you think we were doing when we were 21 years old? Like we were all geniuses? Because I turned 21 in 1998. We were doing the stupidest shit imaginable. It's not like we were doing asset allocation. We were trading whatever the most volatile stocks were of that day and making mistakes and blowing up on margin and blowing up in options accounts and learning. So
Right.
I agree with that. Like these people are done being spoken down to or mocked because of their inexperience.
Scaramucci just tweeted, "We are witnessing the French Revolution of finance." Hyperbole or no?
All right, I'm short that. whatever that means.
Let them invest in cake.
Yeah, shout to Scaramucci. I don't know about that. But so who else is next? That's the thing. I don't think anyone else is next. I don't think there are 500 large hedge funds that are short these stocks. I just don't.
Oh
Then
man,
maybe there's 10.
Oh man, I'm on the other side of you.
But if you
Why?
have a short book right now, like, don't you like really think hard about how you're going to implement it?
Josh, remember Ira Sohn's short presentations? You can't do that anymore.
Well, you can, but there's a backlash. You don't want. I do. Okay, so that's a good point. I went to every Ira Sohn since 2010, like in the audience at Lincoln Center, and everybody's in a suit. The whole audience they're not hedge fund managers in the audience. They're hedge fund marketers, right? The whole thing is a networking thing. And then on stage, very, very bright people go up for charity and for influencing stock prices, go up and lay out, here's why I'm shorting this stock. I don't know if that works going forward because what you're basically doing is you're inspiring a counterinsurgency every time you put one of those ideas out there, especially if you tell the market, I'm short 10 million shares of this. Oh, are you? Right. Really? Tell us more. Right?
Here's another big unanswerable question, and I don't mean this in a condescending way. Do these people grow out of it? Do the people that are 22 years old, are they doing this when they're 32 and 42? And what is this?
I think it's the opposite. I think now you see people launching funds. Now you see people saying we're going to buy the most shorted stocks.
Yeah, wait till we get the eToro in the U.S. and these people are being tracked on there, and you can follow their
this
portfolios.
is a structural issue. It's social media. It's markets. It's with us for the duration. I'm not saying that GameStop, and I'm not saying it's going to be this easy, quote unquote, but I think that this sort of thing is with us.
Let me ask you this: do you think this is something that could not like put an end to, but slow down the adoption of index funds that have just gone crazy for the last 15 or 20 years? Could this slow it down where some people say, you know what, I'm just going to try this on my own?
But don't you think that index fund money is coming from retirement accounts?
I was going to say, what if you're 28 years old and you're putting in your $17,000 or $18,000 into the 401k?
A 28-year-old, very well paid 28-year-old.
Fine, whatever. 35-year-old. You're maxing out your 401k, and then you have another 10 grand that you have in Robinhood, and you're trading meme stocks. Like you can't, in other words, most people have the ability to keep those two things separated in their brain. Like they understand the difference between investing and speculating, and I think maybe they'll want to do both. Or maybe we're back in offices and back at work, and people just don't have time for this shit anymore, which is what I've pretty much thought all along. Is that a lot of this is an artifact of the environment we've been in. It's now been a year, by the way.
This is definitely quarantine related. If you're doing this, you can't take your eyes off the screen.
This is the velociraptors learning to use the doorknob. We've had a year of people teaching themselves to trade, and they're not stupid. They see what's been going up. What's been going up is all the stocks that the experts told them would go down.
And I think
they just watched Tesla go up 8x in a year. They know. They now know.
It's not only the social media stuff. Robinhood set this in motion when they started offering $0 commissions. That was like a domino a few years ago that got this thing rolling.
100%.
And now every brokerage went to free trades, and for whatever reason, just taking that $4.95 off or whatever it was, turning it off. Like I think that took the barriers to entry down, and people decided, all right, now it's time to go crazy.
Also, though, the app is so easy to use. It's never been easier to get into a position. You don't have to confirm all these things. You don't have to calculate how many shares can I buy with how many dollars. It's all done for you, which I think is like another barrier that might have stopped some of the trading. It sounds crazy, but you really have no barriers whatsoever. No financial barriers and no user interface barriers. It's just open the app, trade. And I agree with you, Ben. I think that was a seminal moment for this kind of thing, and we're seeing the repercussions of that. Love it or hate it. One other thing I wanted to ask you guys, do you think that there are professionals embedded within these chat rooms that are very heavily involved either in orchestrating the stuff or in reporting back to the PM they work for? Here's what people are chattering about.
I like Kevin Durant, like burner accounts.
They're real guys with burners, trying to figure out the next explosive trade.
If they weren't before, they are now.
Agreed.
They have to be in this stuff, like scraping this. Don't you think? They have to be paying attention to this.
What if we see somebody AstroTurf one of these? Like, what if we see somebody spark one because it works for a position they have?
By the way, speaking of the big money, I wasn't kidding. I think that the Medallion Fund is in on this. Like if their system is just running and picking up short-term frequency, they don't know what's inside of it unless they specifically are restricting these names. Don't you think that they're high frequency trading these options like on the milliseconds?
Because they're momentum options and they might have a momentum strategy that just like they have no idea what's going on. The machine is doing it.
Correct.
I feel like they have to know what's going on. I know that they keep themselves secluded and they try not to be in the spotlight and I don't
think they know every position that they're trading. But what's interesting to me is Corey wrote about this. This is how it could spill over into the broader market. Naive momentum strategies that don't control for volatility, that just screen, okay, what's the best stock over the last 3 months, 6 months, 9 months, whatever. Let's sweep it in because that's historically how it's been done to a certain extent. What if they buy GameStop after the herd already left?
They're probably going to when they rebalance at March 31st. A lot of these stocks are going to go in these funds, right?
If it's a screen, then it has to.
So that's where it could start to get really funky.
I mean, really funky? Look at it right now. Can we look at some of the others? Duncan, put up.
What's the biggest hold? Like XRT, the biggest holding is GameStop. What is it up to today? Let me check this out.
Yeah, let's see it.
So XRT was an equal weighted retail basket. That's what it's supposed to be. It's a retail ETF. GameStop.
Oh my.
GameStop is 10% of the fund.
Oh my God.
So it's probably up to 12 or 13% now.
The fund is up 45% year to date. That's a sector ETF.
I probably have some stocks that are doing this right now, and I don't even know. It's really funny.
Let me check this out. This is, man. XRT, $758 million in assets in this thing. So it's not a small ETF.
I might have to sell some stuff. This is like 3 years worth of expected returns.
It is
in like 5 minutes.
It's frightening. Honestly, we're excited, but all jokes aside, it's frightening to see markets behaving this way. To see markets just acting like a casino. And I know
on the other hand, like it's not infecting the overall market, which is the strange thing that the S&P's down 1% today. It's up 2% on the year, maybe.
But still, I agree. I'm just saying, do we want to live in a world where people can be liquidated just because of the herds?
Well, that then gets priced in, but that then gets priced into everything.
So people are saying these options are going to start getting way more expensive, like prontissimo. So maybe that's what slows it down.
You want to buy puts? Here's the new premium. Here are the new premiums on puts. Market set these premiums. Why? Holy shit! Here's why.
Right. So the volatility explodes, and eventually the options will price people out of the market.
Yeah,
except for Chamath.
I got to tell you, I don't buy into this story though of like FANG stocks being at risk because of a couple of hedge funds getting liquidated. Like Andrew Left does not have a $300 million Apple position. It's just not the reality.
But, so I'm not super worried about it. Is it possible? Would you give it like a 2% chance that it bleeds over?
I would never say anymore. After I saw oil trade at a negative number this summer, I will never again use the word never. I will only use the word never when I'm saying that I'll never say it. Okay, how about that?
But all these stocks could go to zero. The S&P wouldn't blink, right?
Ooh.
GameStop could go to zero right now. The S&P would be fine.
But the XRT won't. You see?
Yeah.
You see what I'm saying? They're in sectors.
And
and
you guys think this is a good place to leave it, or is there anything that we didn't get to?
We should just do this for the next 13 hours. I don't know.
We would have to.
All right, guys, thank you for joining the emergency market update. We don't do these often or ever, actually, but this is historical. We wanted to chime in. Follow the channel, subscribe to the channel. We love you. We'll be back soon. Duncan, take us out. I got to get lunch.